Hey guys, AKIL'S here. I wanted to share with you a quick trading idea on oil. Apologies for the voice in the middle of eating lunch, but didn't want to let this go. This is something we looked at this morning, and pretty much here's what has happened with oil, right? It's been in the news lately for a lot of shenanigans happening out of China, hurricanes, stuff like that, war. But from a technical perspective, we have recently broken and closed below a previous structure low, but we've come right back down into two other previous lows as well. And we've seen a little bit of a retracement off of that level. That retracement has taken us right back into previous levels of structure support right here. And what we did on the 4 hour recently was break and close above a recent structure high. So that higher high, higher close has allowed me to make the prediction that oil is likely to continue up higher. Now, when I say continue up higher, I'm still looking at this from a counter trend trading perspective. So I'm not expecting oil to rally up to 90 or 100 or anything like that. But I'm looking for price action to go to the next level of structure. And that's going to be right in here. Now, for you guys that are new, something that we teach our traders from the very beginning is how to properly read a price chart. And it's important that you learn this foundational skill at the very beginning because everything else will kind of grow off of that. And at the very basic, what I have our traders do is just mark up a chart, right? So take your line tool and draw out, we call them your ebbs and flows. So a move, a swing low to swing high like that, a swing high to swing low like that, another swing low to swing high there. Keep marking it out. And what you'll find is that if you do so, it's going to be very easy to pick either specific levels of support and resistance or kill zones, right? The levels between those areas of support and resistance that will help you with your predictions. Now, in this one specifically, we started with this zone right here, giving us kind of an aggressive level at the very top, a conservative level at the very bottom right here. And then we even kind of built in a smaller, more specific zone, taking the consolidation level that comes right before this big red candle. We call them elephant candles. It's a supply and demand thing, but I try not to get in that too much because I think it confuses traders more than it helps us. But for you guys that are familiar with supply and demand, you know exactly why we're looking at these types of zones. So we have that kind of bigger picture perspective of where we think price is likely to go, which tells us if this is a trading opportunity or not. And what we're looking for this morning is after that higher high, higher close, a pullback, right? And that is exactly what we've got. We've got price action creating the higher high, higher close right here. We're pulling back into our previous level of structure, just like a normal trend does, right? Just like we've done countless times in the past. And thus far, right? Still early yet, and there's certainly no sign for entry yet. But thus far, we've gotten some positive signs. You can see the last 2 hourly candles here have long tails to the downside, meaning that price pushed down, they got rejected and beat back up. Price pushed down, they got rejected and beat back up. Something I would love to see is a higher high, higher close. That would give us confirmation that the bulls are back in control, or maybe not confirmation as it's a certainty, but confirmation as it's more likely to happen than not. So we still have to wait and see, but this is the part of the trade that, you start kind of locking in on. We came to a 3-2 Fibonacci retracement as well for you guys that are Fib people, which is the retracement level that we should come to if we're in a quote unquote strong trend. Now, to dial down on these targets, right, because these zones are pretty big here, we did two things, right? One, we took a Fibonacci inversion from our swing low to swing high backwards like this at the time because this pullback didn't happen. So this was the only option that we had. We had a nice 1618 Fibonacci inversion right there at 73.18. And then what I did later, a few minutes ago before recording this, was I finally took our Fibonacci extension from our swing low to our swing high up here, right? The traditional way we would use it. And you can see a nice little area of confluence where that 127 extension lines up right with the 1618 inversion, giving us a really nice level for a target one. And we have that 1618 extension up here as well at that very, the top of that zone too, which can play for a nice target too. I would actually put this down a little bit to 74 even. I have to think about psychological numbers, but up in that area, we have confluence as well. So if you are an oil bull, it is worth keeping an eye on this trading opportunity. This is valid until we break this level, right? So even if we don't reverse right here, it's still valid, it's still valid, it's still valid. All it's doing is giving us a bigger risk reward ratio. So you want to be patient. You don't want to have FOMO. You don't want to kind of hop in early, afraid you'll miss out. Wait for your reason for entry. wait to see if the market gives us a sign. And if so, then you pounce. So hope you guys enjoyed the video. As always, hit that like button or that rocket ship to show some love. If you have any questions or comments, leave them below. And until next time, plan to trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.